Okay, so just a quick introduction of myself. I'm Lee Sing. You can also find me on LinkedIn. So for those of you guys who are watching a recording, if you have any questions, please feel free to reach out to me on LinkedIn. If not, right, you can also have your questions placed in the Q&A box if you're with us here live right now. So just a quick disclaimer, the information presented here, it's not to be treated as investment advice. It's for educational purposes only. So this is the agenda that we will be covering for today. We will first take a look at MACD's basics, right? So this is just for the benefit of those who missed the earlier session. And following that, we will take a look at bullish and bearish divergence, right? How do we differentiate them? And also we will hop onto our charts to take a look at how we can apply these examples. And following that, right, we will take a look at how we can incorporate MACD divergence and price action, and how we can use both of this to develop the strategies. Okay, so this is an example of MACD, right? So this is an indicator. So MACD itself stands for moving average, convergence, and divergence. There are three components in MACD, right? So it's a widely used technical indicator, and it helps us to identify potential trend reversals. So the three components that we have, right, would be our MACD line, signal line, and our histogram. So the MACD line itself, it's the histogram itself, right, is actually from the MACD line. So it's the difference between our MACD line and signal line. So you can see here, right, in the diagram below, if the MACD line is holding above the signal line, so MACD line, it's the one that is in blue, and the signal line is the one that is in orange. So essentially the MACD line, it's calculated using the difference between the 12 days and 26 days exponential moving average. And the signal line, it's using the 9 days EMA on the MACD line. So in general, you can see that when the MACD line, it's above the signal line, right? So example here, when MACD line crosses above the signal line, so the blue line holding above the orange line, you can see what happens on the histogram, right? So the histogram, which it's basically the difference between both of these lines. So the gap between these lines, right? So when the gap is wider, you can see that the histogram is higher, right? So that's what the histogram measures. So when the histogram is above 0, it means that your MACD line is holding above the signal line and vice versa. So in terms of how we can use MACD to interpret bullish and bearish divergence, right? So let's move on to the next slide. So this would be looking at how we can use MACD to interpret our bullish and bearish divergence, right? So in this example, this is an example on euro dollar, I believe on the 4 hours time frame. Just clear this drawings. So essentially, all right, maybe first I'll cover on how we can identify a bullish divergence and a bearish divergence. So for bullish divergence, it occurs when prices are making lower lows, whereas for MACD, it's actually reflecting a higher low. So in this example, you can see here, right, price forms a new low. So this low that we have, right, it's actually higher than its previous low. So we can see that prices are forming consecutive lower lows, whereas on MACD, it is forming higher lows. So if I mark out the lows here, you can see that this low that's formed, or rather this low that's formed, is higher than its previous low. But in price itself, you can see that this low that was formed, it's lower than the previous low. So this is a bullish divergence, right? And what this suggests is that your selling pressure, it's weakening, right? And when selling pressures weaken, so when there is less sellers to come into the market to push price lower, what this might translate to is that we could see a potential bullish reversal. So which is what we saw here, right? So once MACD fails to form a new low, and you can see that while prices are pushing lower, this selling momentum, it's weak. And what we're seeing afterwards, it's that price broke above it, and right now it's trending to the upside. Of course, this is also supported, right? If you take a look at the structure that we are seeing on the left, you can see that this is supported with a break in structure. right? So once price, so we covered this in yesterday's session, right? So in a downtrend, we can see the highs themselves would hold, whereas the lows are constantly broken. Whereas, right, signs of this downtrend ending, it's when we're seeing a change in structure. So price no longer form new low and highs. Rather, right, we see the highs being broken, and right now we're seeing that change in trend with higher lows and higher highs being formed. So with this in mind, right, when we apply the same concept to this level here, you can see that the prior trend, it's downwards. Prices, if I were to mark out just the highs and lows, the peaks and troughs, you can see prices are forming lower lows and lower highs. But what happens after is that, again, the assumption is that if the downtrend is to continue, right, price should continue to the downside. But instead, what we're seeing here is that price starts breaking this high above the previous high, did a pullback, and currently it's sitting on a support level, consolidating at this area where we could see more upside. And this again, right, it's also supported by the MACD indicator, reflecting a bullish divergence. Right, so this is a sign of a potential reversal, and MACD reversals, or rather MACD divergence, if this is a bullish divergence in an uptrend, then this signal itself would hold more weight as compared to seeing a bullish divergence in a downtrend, right? So let me just again highlight the same example. So again, if price starts forming lower lows and lower highs, whereas on your MACD, right, so there is no change in structure, and on your MACD it starts showing you bullish divergence. What this bullish divergence could translate to, it just means that prices could do a slight pullback into the resistance area before continuing to the downside. So as much as possible, right, while bullish divergence themselves can present a sign of reversal in price, right, we want to ensure that it's supported by market structure. Okay, so when we're seeing a change in market structure, then this bullish divergence would make sense, right? Because right now, if we're in an uptrend, any pullback into a support area itself, if price comes into a demand zone, then this area could be one that price would respect. And again, it would be supported, or rather the bullish divergence would then hold more weight. Okay, so that's on bullish divergence, right? So let's take a look at bearish divergence now. So for bearish divergence, it's the same idea, right? But for bearish divergence, essentially, we will be seeing price make new highs, whereas your MACD histogram would form new lows. So in this same example, you can see here, right? So price starts forming new highs. So if I have to mark out these highs, right? So price starts forming higher highs. But on your MACD, right, it starts forming lower highs. Okay, so again, right, what this means is that it could indicate that buying pressure it's weakening, and we could be seeing potential reversal from here. So again, if price starts breaking above this high, right, this can be a break in structure, and if it's the continued on an uptrend, what happens is that we should see price pull back and continue to the upside, right? So this reversal itself, this reversal here, it's a first indication of a potential reversal. But again, right, we need to be aware of the market structure that we're in. So divergence themselves can be useful in highlighting reversal points, but this has to be supported with price action. It has to be supported with market structure. So this would make sense if price comes into a resistance area, right? So if we have a prior resistance that's being established, for example, if there is a resistance level that's formed here, the high, right, price coming into this resistance and showing this divergence accompanied with a break in structure, right? So price starting to form new lows, breaking below this lows, then this is a sign that this bearish divergence will hold more weight, right? If not, this reversal that we're seeing, price could always pull back and continue to the upside. Okay, so with regards to how do we know whether this area is going to hold, we will use the lower time frame as confirmation. So when price comes into a zone, right? So like what we saw with the Go example yesterday. So for those of you guys who missed that session, right, you can actually take a look at the recording on YouTube. So we have all the sessions recorded. It's also linked to our YouTube page. So do take a look at that, right? But in general, you can see that when price comes into a resistance zone, so let's assume a resistance area here, right? So if price is in a prior downtrend, it broke below this range, we tested the zone as a resistance or supply region, you can see that this whole leg itself that price pulls back into, so this leg that we're seeing here, this pullback leg, on the lower time frame, this leg itself is actually reflected on the, let's say the 5 minutes or even the 15 minutes, right? It's bullish market structure pushing into this higher time frames resistance. So if we want more insights as to whether this zone it's going to hold, right? Because price could always continue to the upside and just break above this zone, right? So if we want to have more confirmation on the lower time frame, then what we can do is to wait for that change in structure to happen. So if price respects this zone as a resistance, what we should be seeing going forward, it's for price to break this uptrend. And this is first indicated with a break in structure before continuing to the downside. So if you take a look at this example, right, if we go to the lower time frames, or even if we don't want to switch the time frames, we want to just use the same time frame, you can see that this new lows that are being formed, right, over here, right, it's the first low that's being formed. You can see that price failed to make the high, price continue to the downside, and what happens after is just bearish market structure moving to the downside. Okay, so of course, once this is being formed, again, we want to ask ourselves the same question, right? So if this downtrend is formed here, right, in a downtrend, the highs themselves are not broken, the lows would be weak targets. So in this lows, right, we might not want to look at bullish divergence, right? So you can see in this case, we can see price starting to form lower lows and lower highs. Right, so this is an area that we might not want to consider. Whereas in an uptrend, if prices are coming into a supply zone, right, this bullish divergence, especially when this supply zone it's on a higher time frame. So if your supply zone it's on your daily time frame or even on the weekly time frame, this higher time frames would generally hold more weight. So what this means is that when we start seeing consolidation and a reversal in these zones, right, then these are areas that we can consider to take our trades. Okay, so let me just share an example on Go, right? Hopefully this helps. Okay, so let me just bring up the charts and I'll share this example on Go. Okay, so let's take a look at this example on Go here. So on the higher time frame first, you can see the higher time frames picture on Go, right? So prices are sitting on a higher time frame weekly support zone over here, right? So we saw how price broke above this region and currently it's retesting and sitting on this region again as a support. And even if we're to draw or put these levels in close, you can see that this level was a previous rejection. We saw the strong rejection below this zone before price broke above it, and currently it is sitting on this level, potentially testing this area here. So then again, the question to ask ourselves is how do we know that price would hold within this zone? Right. In earlier session, I also covered on the use of dojis and how dojis within the range, especially on a higher time frame. Right. So if we are seeing dojis on a higher time frame, what this suggests is that it represents a range that prices are trading within. Right. So if you take a look at the same example here, right. So an example of a doji that we have would be this zone here. So let me just remove that, right? So this is an example of a doji with relatively small bodies and long wicks, right? So the idea of doji is that it represents uncertainty. The opening and closing price are relatively the same, like this example, this candle that we're seeing here. So you can see that they are relatively near one another, right? And if you focus on this doji down to the lower time frames, right? The same doji that we have marked out, on the daily time frame, you can see that this doji represents a range on your lower time frame. So there is a support resistance area that price traded within for an extended period of time before it broke above or below this zone. So this dojis on the higher time frames, they are nothing but ranges within the lower time frame. So one way to identify, right, if you want to determine it just based on the higher time frames, one way to identify or even automate it would just be to look at dojis on your higher time frame. So with this, you can see that this is the range that price trades within before it broke above this area. And once price comes into this zone, you can see that this now serves as a support region here. So what happened after is that price pushed into this area. You can see price pushed into this zone before it continued to the upside. And accompanied with that, right, you can see that change in market structure happened as well. So we talk about market structure, right, how price pushing into this support area. We don't know if it's going to mitigate deeper into the zone because price could always continue to the downside, or it could just break this zone altogether, right? So how do we know whether price would follow through, right? So one way to know it's to see the market structure on your lower time frame. So because you can see that when price pushes into the support area, right, we have a parallel downtrend that's being established in terms of lower lows and lower highs being formed, right? So if you put these levels, or even if you put this put this chart in close, you can see that these highs and lows themselves, right? If I have to mark out the peaks and troughs, these are forming consecutively lower lows and lower highs. So what this suggests is that when we are seeing this move down, the push into this higher time frame support area, which is this blue zone that we're seeing here, right? What actually happens? It's that on your lower time frame, pushing into this zone, it is showing you bearish market structure. So how do we know whether price would respect this area, right? Or if the downtrend is going to continue? It's looking for clues of that change in direction in terms of market structure on your higher time frames. So you can see that price starts forming lower lows and lower highs, but what happens after is that price broke above this region. It broke above the high, right? So if I were to mark out the highs and lows, you can see this area. This is the high. We have a subsequent high, and price broke below the low here, right? And then right now we are seeing that break above this high. And what happens after is that prices are just pushing to the upside. So with this in mind, right, we can see that if there are clues as to price breaking this range, and again, this ranges, right, if you want to go to the higher time frame, either on the 4 hours or daily, they are represented by dojis on the higher time frames. So with this in mind, if there is a change in structure on your higher time frame in the form of a break of the previous low, or even price breaking within a doji itself, then this could indicate a change in direction. So with the same example, you can see this is the daily, right? So prices are currently sitting on the daily doji. If we want to see whether it is going to respect this move, we can just go to the lower time frame. Again, try and look for range that price broke within here, right? So this example, you can see that this is the doji here. So what this represents on the 4 hours, right? So again, I've marked out the doji. So what this represents on the 4 hours is just a range. So if this is a range, right? So let's just backtrack slightly. You can see here. So if this doji itself represents a range on the lower time frame, and we're seeing this strong bullish candle that's breaking above this range, then what this suggests is the change of buyers, a change in hands, right, between sellers and buyers. Sellers are failing to hold this level. And what happens is that we are seeing this strong buying pressure pushing above, right? So when supply fails, so this is the supply. When supply fails, it creates demand, right? So what is the candle that still held within the supply before the failure? This is the candle, right? You can see this candle held within before we saw that strong bullish move up. So this is the demand area here. So you see that change in hands between buyers and sellers, right? So currently you can see that prices are sitting on this level, sitting on the demand area, and also within the demand zone itself, right? Recall this area here, you can once again see another doji. So what this means, it represents uncertainty. What it also represents, it's ranges on your lower time frame. So if I were to just zoom in on this doji, focusing on this area here, this is the 4 hours doji. Right? If you move to the 1 hour time frame or even the lower time frame, right? If you move to the 15 minutes, for example, so the same circle area, right? You can once again see that range being formed here. Right? So this is the range, price trading within support and resistance area before it broke. You can see this soon. right? So price trading within this range before it broke above, and this breakout is characterized by the strong bullish candlestick with hardly any wicks, right? So it represents sustained buying pressure, and you can see what happens after price revisited this zone. If I were to extend this area across, you can see that price then revisited the support region. And once again, we're seeing that bullish move here, right? So price breaking to form lower lows and lower highs, and the change in structure with the break of the previous high here. This is the last high that we have, and we're seeing that break above this high. Okay, you can see when price holds in this 4 hours doji, right? Price broke above this high, and right now we could see more upside. Okay, so that's how we can use price action. And of course, accompanied with that, right, we have our MACD. So MACD itself, it's an indication of momentum shift, right? So we want to use price action or market structure to support our MACD. So there are a few ways you can use MACD, right? So to trigger bullish signals, right? So we need to focus on price crossing above. So bullish crossover is one. So for the blue line or our MACD line, right, essentially, which is the blue line, to cross above the signal line, right? This is the first sign of bullish pressure. Of course, right, it has to be in line with what we're seeing on the charts. It has to be in line with market structure, in line with the higher time frames direction. So when there is this crossover, you can see that this is the initial crossover, right? If we want a bullish confirmation, it can be a crossover when MACD it's above 0. So that's one, right? So you can see here, right? Once you have this established, right? So looking at dojis on the higher time frames and waiting for price to enter this dojis as demand areas, then the next level of filter that we can have is to wait for MACD to cross above 0 to provide the bullish signal. So MACD by itself is an indicator, but as you can see, right, using MACD or deciding what we want to focus on, do we want to focus on the bullish crossovers or the bearish crossovers, would be dependent on the market structure that we're seeing here. So if MACD is in a downtrend, if prices are in a downtrend, so let's say price starts forming, so for example here, so you can see that in a downtrend, right, I have to backtrack just slightly. You can see this whole area, right? So prices are in a downtrend. If you put it in close, just marking out the significant reversal points, right? The highs and the lows, you can see significantly lower lows and lower highs. Okay, so what this suggests is that market is in a downtrend. And if we were to put this across with MACD, right, in a downtrend, you can see what happens is that price did a pullback into some resistance area before it continues to the downside. So in this case, what we will want to focus on as entries on the lower time frames is to look for bearish divergence, is to look for bearish crossover for your MACD. The bullish crossover in a downtrend, right, would correspond to a slight reversal or a slight pullback, but it doesn't amount to much, right? So in a downtrend, you can see that this bullish crossovers with MACD, or rather the histogram crossing above 0, this area here, right? What this shows is just a slight pullback in price before it comes into resistance area to the downside. So this pullback, it can be shorter term trades, right? So if you are taking scalps or even just quick entries trailing the stop losses on the lower time frames, right? There's potential for that. But if not, you can see that whenever we have a bullish crossover in a downtrend, right? Some of this pullback itself, it's not enough to sustain the move up. You can see that it's just a slight consolidation before price continues to the downside. So it's important that if we want to trade in the direction of the trend, right, we need to use MACD, which is a trend following indicator, to identify which part of the trend do we want to focus on. In a downtrend, we want to look for sells. So in this case, right, in the downtrend, we want to focus on bearish crossovers, looking at MACD below 0 to sell as the trigger to sell. And more importantly, looking at the parallel move that's being formed, right? So if prices are in a downtrend, it starts forming a lower lows and lower highs, then bullish crossover might not mean much in a downtrend. So these are signals that we want to ignore. Whereas in an uptrend, so the same example that we see here. So in an uptrend, you can see that prices starts forming higher lows and higher highs. Then this bullish signals itself would be potential entries. But you can see that the bearish crossovers, or even MACD crossing below 0, right? This bearish crossover can correspond to just a slight pullback or consolidation before price continues to the upside. Okay, so a lot of it, the trend, it's or rather market structure, would be useful in helping us to determine which are the areas that we want to focus on, right? Is it a bullish or bearish signal? So MACD by itself and the divergence will be a helpful tool if we are able to determine just based on market structure and price action, right? Which areas do we want to focus on? Okay, so I hope that this has been helpful, right? So this is in terms of how we can look at MACD and also combine them with market structure, price action. We take a look at dojis, right? So dojis on your higher time frames, they are nothing but lower time frames ranges. So if you have a hard time, right, trying to find this range on the lower time frames, trying to determine the support or resistance areas, you can see that one way to look at it, especially from the perspective of automating trades, right, you can see these zones that prices are trading within this range, right? This is the picture on the 4 hours. If I were to highlight this zone here, let's move to the daily time frame or even the weekly time frame. You can see the zones themselves, right? They are nothing but, so this range that we're seeing on a 4 hours time frame, if you go to the higher time frame, the daily, for example, right? This range, you will be able to find a doji. So again, right, the doji itself would represent a range on the lower time frame. You can just mark out the doji's high and low. So each candle has a OHLC data. You can mark out the candles high and low, and that will be the range on your lower time frame. And this range is useful, especially when price comes into this zone, right? So if this price broke above the range, then this range itself serves as a demand, right? So let me just cover this slightly. So this is the range, this is the doji. You can extend this across, you can see that this is the demand area here. Right, so if this is the demand zone, when price comes into the demand zone again, we want to focus on this portion of the chart, understanding that when price comes into the demand zone, it will start pushing into the demand area, it starts forming bearish structure, right? You can see all the way when price pushes into this demand area, this blue zone that we're seeing here, we have a bearish market structure in forms of lower lows and lower highs, price consolidating within, but there are no signs of reversal, right? So if price were to respect this demand zone, it should show a sign of a change in structure and breaking this lower lows and lower highs chain. Right, but rather what we're seeing is that price just consolidated slightly here before it continues to the downside. So there are no signs of reversals, which also means that on your lower time frame, there's no confirmation for any entry, right, or any signs of reversal. So in this case, right, when market structure doesn't show a signs of reversal, on MACD itself, you can see the MACD, even though there is a bullish crossover here, right, you can see the signal line crossing above. I mean the MACD line, the blue line crossing above the signal line and histogram turning above 0, you can see that this is not supported with market structure. Hence, this signal itself, right, does not hold any weight. Okay, whereas for bearish crossovers in a downtrend, so when the blue line crosses below the signal line, you can see that this bearish crossovers can be used as potential entries, right? And exits can be when MACD crosses above 0, or it can be when MACD when the histogram crosses above 0. So when histogram crosses above 0, it just means that your MACD line, it's above the signal line. Okay, so I hope that this has been helpful, right, in terms of how you can use Doji's market structure and also MACD to identify the trades and which are the areas that we can focus on, right? So in different parts or across different market structures, you will be able to find that in a bullish market structure, we want to focus only on the bullish crossovers or MACD crossing above 0 as buy signals. And in a bearish market structure, right, the bearish crossover, basically MACD holding below 0, MACD crossing below the signal line would be potential signals, right? We want to ignore the bullish crossovers because in a downtrend, right, bullish crossover could be nothing but just representing the slight pullback before price continues to the downside. Okay, so I hope that this session has been helpful, right? If there are any questions, please feel free to put them under the questions chat. If not, right, if you want to take a look at the recordings, you can actually go to vantagemarkets.com/webinars. So these sessions are recorded, right? So if you want to review the earlier recordings, you can just go under education and tools, educational webinars. Right, so this is the schedule that we have for the week. So we have webinars on a daily basis. You can sign up for them here. And if you scroll down lower down here, you can see that we have all the previous recordings of MACD and also our live analysis sessions. Okay, so if there are no other questions, that's all that we have for today, right? So thanks everyone for staying with us till the end as always. Have a great trading day ahead, and we will catch you guys again tomorrow.